Hi guys, thanks for tuning in to another episode of Nuggets News. Well, another massive news week. We had some historical changes from the Federal Reserve. We're going to dive into all that macro news and then have a look at the crypto headlines. We welcome a few hundred new subscribers again this week as we head towards that milestone, hopefully before the end of the year, of 100,000 subscribers. Some very loyal people amongst you who have stayed with us throughout that whole crypto winter. So look, we do thank you. We've had some really interesting live videos lately, which I know you guys are enjoying. So I'm going to try and do some more of those. I'm going to talk about Troy and Kyle, who we streamed with, because we got a lot of questions after that live stream. But look, I do just want to thank everyone that's also getting behind us on Twitter. I would encourage you to get on Twitter if you haven't. So there's a lot of junk out there, but if you can cut out all that noise, there's some fantastic information, or alpha as they call it on Twitter, where you can get little insights early before it's on the mainstream sites and pick up those little tidbits, and it can really lead to some good little clues, trades, or investments. So thank you for everyone that's following us on Twitter, but particularly our members. So we've had another record week. Nearly 300 members this week. We're over 3,500 in the group now. Now it's got extremely busy and we are up staffing. We've got more and more moderators coming on. We have got that beginners thread for all those beginner questions, because I know it is a little bit confusing. There's just overwhelming amounts of content there if you're getting started. So until we have the new Nuggets News platform, which is coming out any week now, we've got a bit of a temporary solution for you guys there, where myself or one of the other members or moderators are going to really get in there and help out all the beginners. Now, keep in mind that a lot of our content is on the Resource Hub, and some of this is free for your friends and family if they want to head over to nuggetsnews.com.au. But we are trying to teach you all, particularly in our premium group, about the fundamentals, which are really starting to play out this year. And a big congrats to Chris. This is actually the second time I've had to give him congrats, because he has been with us for a long time now. He's learnt our methods, and this is the second time he has shared his research, and it's led to those 1,000% returns. So this is the research that he shared with us back in April, when it was trading at 0.2 of a cent reserve rights. This is one of those stable coin projects that's now trading well over 2.5 cents. So another 1,000% there for Chris. I know plenty of the other members are loving his input as well. And look, crowdsourcing all the news and research is just creating network effects in our group, which I really love. In terms of Friday night, when we did the live stream with Troy and Kyle, the questions we got was about their course. So if you head over to our website, there's a link for all our partners, and we have discounts for all of those for everyone. And if you're in the group, head over to the discount section, and we have bigger discounts for our members to save money as well. So let's get into the local news now. Australia's recession will extend into the third quarter. Look, no surprises there, apart from the fact that it is coming once again from one of the big banks who don't normally talk doom and gloom. So when we have a look at the support and where it's coming from, the net cash flow for a lot of these households, we can see these stats in terms of the absolute figures of lost wages and that government support that all countries around the world are talking about trying to withdraw, but I just don't think it is a reality. So Australian payrolls again out this week, down 1%, not heading in the right direction. And this gives you another visual idea of the percentages and the slack that has been made up just from the start of the year until now. Very, very clear where the salaries are coming from. You know, these contributions from government, if they're withdrawn, these are now a huge part of the economy. And if we pull that out, you know, we're talking 20% differences here in terms of the contribution to where any of this wage growth is coming from. And that's the only way you're really going to get out of this problem, is growing and creating jobs and growing the economy. So it's not only the banks that have been telling people to look to move, it's now job seekers fearing their payments are going to get cut and being told to look for regional work. So here we have another article I've touched in the past. I think it was NAB and ANZ telling their customers, and now Commonwealth Bank. They've joined this movement to encourage customers to downsize. They don't want to have that fiscal cliff, so to speak, where all of a sudden they've got all these people that they're looking at evicting. And I don't think they would let it get to that point. the government would rather extend and pretend and help the banks as well, just continue to freeze those loans because they don't want mass unemployment and people out on the street. But they don't really have a plan. That's, I guess, the message I'm trying to get across. And so when you're starting to see the actual banks tell people, well, consider selling and downsizing and moving rural, I guess trying to sort of flatten that out so it doesn't just happen all at once. Now, super contributions have had a record fall. No surprise again, if we have less people employed, of course the contributions are going to be going down. But I guess that's the double-edged sword, because we've also had a record amount of people pull money out of their super. Now, we're starting to hear that a lot of banks are asking about this. So credit lending has been tighter than in many, many years, and that's in America as well as in Australia. You're hearing about how it's so hard to get a loan for anything, let alone a mortgage. But this sounds like it's going to be another little cross against your name if you did raid your super. Now, I don't think it's just if you did it when you didn't need to. Regardless, I think it's just another sign to the banks that you're kind of struggling or worried about your future earnings if you're taking out. They don't really want those, I guess, type of customers, in their opinion, to be able to get those loans and mortgages because they're really worried about failures. They're trying to shore up their books. They're worried about loan losses. So, look, I'm sure some of you have had positive experiences, and I know a lot of people are trying to swoop up and buy properties that they can believe are cheap, but there's also a lot of stories we're getting about people that are finding it near impossible to get money from some of the banks these days. Now, responsible mortgage lending is dead. So this is the counter argument where macro business is saying that, look, forget what happened in the Royal Commission. The lending standards are gone again. So look, always you see these extreme examples and the truth lies somewhere in the middle. I guess that's the message I wanted to get across there. Australian household savings rates are climbing. So more and more Aussies are bunkering down because of the uncertainty. And this is that counterintuitive economics phenomenon where the central banks, their textbooks are telling them that when you drop interest rates or when you tell the market that you're going to keep interest rates lower for longer, people are more likely to spend. But people just aren't doing that. Even in Europe with negative interest rates, people are now saying, well, I'm not getting those earnings or I'm not getting as many dividends. And that's why I'm going to actually have to save more cash myself. So the Kook gets pretty passionate on Twitter. He's having a bit of a rant, and we know how biased the Australian media is, talking all about how there's just been a lack of coverage when we've had this record government borrowing, the debt starting to climb, and Australia was in a pretty good position heading into this. So I still think relatively we're not that bad. We shouldn't be fearful of keeping people's standard of living at a place where they can put food on the table. We don't want poverty going up, homelessness, evictions. That is just so much harder to get people back on track if we let it get to that point. So I'm a big believer that we need to try and pick up the slack. We're hearing all the stories about people making more money than they were. Obviously, we don't want to be frivolous with our spending, but I think we need to find a happy medium there. And that's what Philip Lowe is talking a lot about every time he talks publicly. Now, our relationship with China continues to rise, those tensions, and that's the same with Australia caught in that rock and a hard place here with the US involved as well. Now, during these South China Sea drills, we had a couple of warning shots fired by China, and this follows a few days ago when they had the US spy planes. So it's just a little bit of a game of chicken here. Let's hope no one pushes the big red button. But we definitely know that Australia's economy is going to be hit very hard if we keep China offside. So in terms of the Chinese economy, they've got 4 trillion of corporate bonds, record highs in terms of the defaults that we're seeing, government coming in having to save banks. They're starting to do a little bit more of that QE that they were holding off on and wanting to be a little bit more fiscally responsible than other countries, which surprised some people. But now they're looking to inject more money into their economy, and that can flow through into other places. And as we get to the stories about the US, that's where you've got to be careful about what you wish for. Now, in terms of some of these forecasts from Bank of America, I just think it's a little bit ambitious still, talking about China getting back to 8% growth. Even the US, 3% to 4-5%, and global growth around 5 or 6%. I'm not sure. For 2021, I think next year is going to be about sort of picking the pieces back up and laying the foundation for possibly stronger growth the year after. But we're really getting mixed messages in terms of not just the currencies and who's in a worse position, but about the recovery from different central bankers. And all these different central bankers, they're trying to say one thing to help their currency or weaken it if that's their aim. But obviously we want to watch the markets and what's happening, not just what they are saying. So PIMCO are talking about the dollar. The fall is just getting started, and Asia and FX to gain. So more bullish on some of those developing nations, technology in Asia particularly. Some of these bets that we're seeing in the euro markets, looking for the euro to go up over $1.25 over the next 12 months, talking about the Fed's inflation shift and the election being a drag. I think the odds, Trump and Biden have come in a little bit closer at the moment, but look, we've seen some close elections in Australia and they can take a long time to count. And look, challenge, recount, the US fans will be able to tell us more about how they think it is going to play out. But look, you just have to think that this is going to be the most controversial no matter what happens in terms of this US election. And markets don't like uncertainty. But all countries are facing the same kind of issues here. Germany earmarks $12 billion more to extend the crisis and the support. Now, Europe, we speak about this nearly every week, where France, Italy, look, they're all trying to keep these bond rates at similar levels. The ECB doesn't want to play favourites in terms of whose bonds they want to buy. I think we're going to see springing up of these little micro currencies. So not quite the same as central bank digital currencies, because Italy can't create an ECB coin. But we've seen these other little stories start to pop up where smaller regional towns have had their own currencies of sorts. And with this just explosion of stable coins that we'll get to in the crypto section, I think that is going to be something that I guess I'm kind of predicting for next year, that we're going to see these sub-European stable coins or digital monies. So the Fed's bullet has come out and he's saying that the recession is actually over, but rates are going to stay lower for longer. So talking up the market, that's more of a confidence spill, and he does tend to always protrude that confidence. Other economists are talking about the chance of this double dip recession. I've never seen so many letters of the alphabet when it was the talk about, is it going to be a V or a U-shaped recovery? Now people are talking about this L, this K recovery. So look, I honestly think that these economists and central bankers have got less idea than you or I sometimes, because they're so fixated on what their textbooks told them and some of these previous examples. But you can throw that all out the window, because what is happening is different to any time in history. And the big news item this week was about Powell and the inflation, and that has really going to change the conversation for all the different central banks. So some of these economic data points are pointing to the fact that the recovery is really going to stall if these aid programs expire. I think Australia is facing that issue as well, and I hope the government change their tune. But how long is the rest of the world just going to let this US debt clock tick up? And I remember when it seemed to stay around 18 or 19 trillion forever, and now it is just climbing $1 trillion. I think we're going to be at 30 trillion by the middle of next year, and that's when people are going to say, wow, all fiat currencies are heading down this path, and that's where we can get the big parabolic runs in gold and crypto and hard assets. But Shinzo Abe, he was the one that basically started this Abenomics, as they call it in Japan, where the central bank basically buys all the bonds and then ran out of bonds to buy, so had to start buying mortgage-backed securities, ETFs, and other financial products. So he's actually left now. He's had I think the longest stint in history in terms of central bankers, putting his health first. But another reason why I think Powell wanted to make a real point of talking about inflation, because you don't want to head down this path. Steve Keen and I did that interview called Turning Japanese, and you don't want to go down that path where you're the only buyer of the bonds, interest rates are at zero, nothing really happens. Before you know it, it's been 20 or 30 years. And the Fed and all central bankers in these developed countries are scared of that happening. Now, it hasn't really taken hold yet because we're still seeing these record treasury auctions, $50 billion of demand in these 2-year notes, even though it's a record yield. So some investors are still saying, you know what, that's better than nothing. Inflation's probably going to continue at this rate, and we're probably going into negative territory. So if I can get any yield on a 2-year note, give it to me. I'm happy for now. But this was the historical speech. A lot of you did watch it all. It was about half an hour long. I actually really enjoyed it, and you could tell where Powell was trying to take the conversation and soften the blow. And it was amazing to me watching gold and Bitcoin tick up every time he sort of mentioned inflation or looked like he was heading in a certain direction of the conversation. And I think markets, they gave a little bit back afterwards, but now what we've seen over the weekend, crypto's crept up. I think gold had a pretty strong close. Often these big announcements take a little while for the markets to digest. So I do think that we're going to see the longer run impact of this and the repositioning on Monday and throughout this week. Maybe stocks turn around as well. But basically, what he said, if you didn't watch all of this, was inflation, we haven't been able to get it to 2% for so long now. It's been below average. So we're going to try to endeavor for higher inflation so that we get a bit of an average over time of 2%. And no exact formula. So even though it's been, say, 1% for a little while, doesn't mean we're going to try and take it to 3 or 4% officially. Again, it's just so that they can't be held accountable. If you don't have goalposts or formulas, then you can't be held accountable. And remember how they always said if we get to this level of employment, things will be great. And then they got there and things weren't great. And inequality keeps growing and growing. So look, people made a big deal out of this speech, and I think it is. If we get that inflation with negative real interest rates, with the cost of goods climbing at a sharper rate, that is when I think $5,000 gold in the next 5 years, $100,000 Bitcoin in the next 5 years, I think they're very much on the cards because of the value of the dollar going down. Don't think about it in terms of the asset having a crazy run. Oh, that's not possible. It's more just the value of that dollar going down. Here we can see the close correlation of Bitcoin dominance to US dollar dominance, which is the DXY. And this was one that really shocked me in terms of how tightly correlated they've been for 8 years now. So this goes back to 2017. And the question on everyone's lips is, what is going to happen with the dollar? Is that going to continue to weaken? And it's very similar with Bitcoin here. Are all the other cryptocurrencies going to continue to be the stronger play here? Or is the world going to say, you know what? Things are about to get worse. There's a lot of uncertainty. We still want the dollar, even though the Fed are doing this. And in the crypto world, are people going to look back to the safety and, I guess, trusted track record of Bitcoin, which sounds silly to say comparing 5,000 years to 10 years in Bitcoin. But when you compare it to some of these newer projects in crypto land, which have had phenomenal returns, it's a very similar concept. And I was so surprised at this correlation. So let me know what you think of that down below. Now, stocks did break out to those record highs. This is something that I've been predicting when everyone else has been talking about the markets are going to crash, and I've been sort of showing you, I guess, the historical valuations in terms of relationship to M2 money supply. And if they're going to print trillions, it's got to go somewhere, so don't be surprised. And fundamentals are out the window. Salesforce sparked this massive tech rally, and on the same day, they're firing 1,000 staff. And this is where the inequality, and it's not necessarily the fundamentals, the money printing or anything the Fed do that's going to stop this rally. I think it's these 19,000 people that get fired in American Airlines. And then they sort of find out that CEO for the past 5 years, he's been pocketing $200 million stock-based compensation. They had negative cash flow throughout all this time, and he's still getting all the bonuses. They took $14 billion. They bought $13 billion back in stock because that's how he's getting compensated. So one by one, people are getting educated and up to speed on this stuff. It's not going away. And I think that is where people are going to demand a fair system or more government handouts. They're going to elect the person that promises that to them. So another million people applying for the jobless benefits this week. It is staying above 1 million when we did think it was going to tick down in the US. And unfortunately, we did see another incident. I can't talk about this too much because of those algorithms, but we have seen more unrest since this has taken place. And we know that last time that was a catalyst for even, global unrest. So US states facing the most severe housing crisis, vulnerable homeowners and renters, COVID displacing people. I think people want to get out of the city, to be honest. And we've seen lumber prices go up because people are looking to build, pending home sales at these record levels, highest we've seen in 10 years. Whether that's for sales or people looking to go further out, people no longer want to be in the city. But in terms of the relationship here to the stock market and wages, yes, you're going to lose those higher paying jobs if you move out, but the cost of living is lower as well. The number of hours required to buy one share of the S&P 500. Look, historically that was around 25 hours and now that's up over 125. So look, if there's no clear example of the financial economy and the real economy diverging. Capital One cutting card limits as that jobless aid expires for a lot of people. Here we see retail bankruptcies over the past 24 months really spiking here, and all those closures just mean more customers for Amazon. That's why Amazon's at record highs. Empty hotels might be the next big short for hedge funds. We've spoken about how a lot of them are packaged into these corporate bonds as well, and that's why we're seeing so many corporate bankruptcies, faster pace than previous downturns, and the Fed stepping in to buy those. Only 59% of the S&P 500 are trading above their 200-day moving averages, so that market breadth just still isn't there. Marin and I spoke about the fact that the energy sector is at some of its lowest historical weightings in decades. All the money is going into tech, and some of the traditional names like Exxon are being kicked out of the S&P, of the Dow, the biggest companies. They're being taken over by some of the newer ones here. Marin's got plenty of free research over on his website, as well as the premium stuff. Guys, we've got a discount down below if you are interested in his premium research. I know a lot of people are looking for this buy the dip opportunity on gold and silver stocks. This was an interesting slide about how we're subsidizing the tech sector more than we might realize. So effective tax rates for the different types of companies. You can see that the labor there, 25%, but these software companies, a machine doesn't get taxed compared to a robot. And it's just sort of creating those incentives, and no surprises why some of the big tech companies are doing so well. If we actually look at the earnings though, relatively compared to their prices, we have seen them diverge. And what's leading that? You guys know, we continue to talk about the retail flows and the work from home investors, but it's insufficient to sustain the rallies. We're just looking at this liquidity and market depth that's not there. Look at the put to call ratios and what stocks these people are buying, what time of day they're buying. It's just all the household names that these people know and love. Robinhood investors, put to call ratio here at these record levels. Everyone expecting things to go up even though we're already at record highs. And here you can see it as a percentage of overall S&P 500. But when we actually have a look even closer here, the liquidity versus the S&P price versus the futures, we just haven't had that liquidity quite bounce back yet. So even though we've got all the options, we've got a record number of people betting long, if we ever get that long squeeze and we have a lot of liquidations, there is just not the volume and the liquidity in the order book to soak that up. And that's when we get another March style event, like a big, almost like a flash crash, because there's just no one there. All the hedge funds are happy to watch price go up, but it's no good if it's not reality. They can't realize those gains because there's only a few retail investors putting in little bits of money compared to the billions of dollars that they actually have in their funds. So investors ignoring the fundamentals. Another example here, as we see electric vehicle registrations in Europe were up 131%, but Tesla created 76%. So it's Renault and these other companies that are dominating in Europe. The same in China. I don't think Tesla are going to necessarily get their foot in the door there. All these other local companies are going to start to make those cars. Elon did reveal his Neuralink. So this is a brain chip. So this is the futuristic stuff about chips and tracing and privacy. Man, oh man, every week we seem to have another someone is just taking it further into science fiction than we would have believed. But he demonstrated this with pigs, and he does believe that the merger of computers and human beings is now only a few years away. Amazon also getting in, and I guess on this theme, debuting their health subscription service with the Halo band that tracks all the different metrics. And look, somebody is getting all that data. Let's hope they don't share it with too many people. Money is flowing into the tech sector like crazy. So I know valuations are high in the tech stocks, but look at the amount of money that people are raising. Whether it's IPOs in the US, there's another one in China here, Jack Ma's Ant Group. It looks like it's going to be the biggest ever, like wanting to raise $30 billion for a valuation of over $200 billion. So people say that some of these DeFi projects are overvalued. Well, look, these are in the hundreds of billions. We're only talking in the hundreds of millions in crypto land. Now, the New York Stock Exchange is looking to let firms raise directly through listing. So rather than the whole IPO process, just actually list for trading, which is interesting, seeing as they've also changed the metrics for accredited investors this week. South Korea have extended the ban on short selling. Again, I think it's because there's just not the liquidity to soak up a big sell-off or a big push down from the shorts. They know that the volumes are low. And at the same time, we continue to see the insiders selling stock, and that's ticked up sharply again this week. So insiders dumping, retail buying, money market funds continue to unwind their exposure to these assets. Cash in customers' accounts has ticked up. This is a really interesting one for me because there's a lot still on the sidelines, and that surprises people when you talk about that. US equities, they have greatly outperformed everywhere else effectively. So do you argue that Europe is now a better investment, or Australia, just because the US has been out pacing that? I'm not sure, but I think for the time being, the US is still the place where people do want to park their capital because of those world-leading tech stocks. Even though we have seen dividends pull back compared to the negative real interest rates, it's still an attractive place to park your capital. Now, the interesting one here is the relationship between US stocks and the bonds. And look, roughly it's always been that correlation where if money wants to seek some safety and go out of stocks, then bonds will go up. But for the first time ever, you can't quite see that behind me here. It actually ticked negative. So some of these historical norms are just out the window, and people are having to ask themselves these hard questions about, if this is the case, why am I parking my money there? And what else can I possibly park my money in? Now, when we have a look at the money that has been printed, it's pulled back a lot from where we were. And this article is saying that, hey, it's still really high, but I think it's got room to grow in these circumstances as well. So there's two sides of that argument. But when you look at this relationship, this correlation here in the S&P tracking M2, which is the money supply, I honestly think that this is on the cards if they continue what they're doing. 4,500 S&P 500. It seems nuts, but look, we've already put on 100 points this week alone. Inflationary versus deflationary assets. This is similar to the defensive stocks, tech stocks, the big rotation of capital, and you've got to make these decisions, and a lot of people are. That's why we've seen gold outperform lately. Deflationary assets have had their run. Is it time for the protection of the inflationary assets? Gold, silver, Bitcoin, even real estate, you can argue to some degree, anything that's more scarce. But this underlying trend that the Fed are continuing to fight, it is the demographics, the debt, everything is deflationary. And the US births per thousand, this is a trend that is going to continue to trend lower if the world stays on its current trajectory, and that affects CPI. More and more deflation that the Fed are fighting means more and more money printing, because that's what their textbooks tell them is good. That's what you need to avoid. You don't want the cost of goods going down because that means a smaller, shrinking economy. Asset inflation versus real economy inflation. We've spoken about this at length, guys. The S&P 500 versus some of these other things here. And commodities, energy, there's so much catch up to do there just to get back to the historical norms. And that's why we are seeing, look, investors, whiskey is another one. So you can argue that artwork, anything scarce. That's why wealthy investors do like these more obscure assets, because it's just somewhere to park their wealth. The fever pitch in all these ETFs means that Robinhood traders are piling in. The good news is that these ETFs are backed by real gold and silver. So more $50 billion this week. That means they've got to buy $50 billion and put it in the warehouse. If you do trust them, and some of these are a lot more transparent than Fort Knox, but record holdings now getting up towards $1 billion in terms of those silver ounces, which is just absolutely amazing. I love it compared to where everyone was talking about silver being dead. Now, guys, if you do want to get exposure to those ETFs, they're all available on eToro. GDX is the gold miners. GDXJ is the lower tier. It's not necessarily the juniors. It's the sort of the mid-tier gold miners there as well. So that's had a tremendous run, but nothing in percentage terms compared to previous bull markets. So this is one that I am eyeing off. If we get a bit of a pullback here, then I'll be starting to get out the TA and do the analysis of where a good entry might be, because I do like the fundamentals on these gold miners longer term, and you don't want to FOMO and chase the market. You want to be patient and let the market come to you. So guys, we do still have that $100 Bitcoin sign up bonus. The link is down below there, and the tutorial on how to best use eToro effectively. Gold speculative positions have unwound a little bit. Remember, we were talking about those being at record highs, and we don't want people betting everyone on the one side of that ship. So the fact that this has come back a lot, but the gold price has basically remained within $100 of the record highs, that is all really, really healthy action. That tells you that there's a lot of buyers out there. And I think tweets like this from Raul and Paul Tudor Joneses of the world, even Warren Buffett saying he's going to go into gold, more and more people are starting to understand this argument here, and particularly the risk to reward. So as Raul says, look, maybe gold can double or triple and get to $6,000, but Bitcoin has got a lot more room. It can go 50 or 100x even longer term, but that comes with more risk. So that's where you've got to say to yourself, well, what is my risk appetite, my risk to reward? Do I need a bid in both, and do I need to adjust those amounts? So they're all the decisions that you have to make, but I think both of those asset classes have very, very bullish thesis if all this money printing continues. And it's no surprise that you see these software companies, I think this is the third company we've seen in 3 weeks, now parking 40% of their cash reserves in Bitcoin. Warren Buffett buying gold. These shouldn't come as a surprise to you if you've been listening to everything that we've been saying for years and years now. Alrighty, so let's get into the crypto news. Australian exchanges have followed a bit of a global trend we've seen over the last 2 years, which I predicted, of delisting all the privacy coins. Now, some of them have also teamed up with chain analysis. So I think it was CoinSpot, CoinJar, SwiftX. So they are working with regulators. The ATO guys, they are tracking this stuff. So do the right thing. And if you've listened to my message, privacy coins are not, I believe, a good investment. But it is going to be interesting to see where this plays out, because, look, all the watchdogs around the world are cracking down on the money laundering and realizing that blockchains are a public record that's there forever. Even Binance helping actually catch some of the frauds and all the crooks now. So look, it's a bit of it's a weighing up between your liberties and the censorship resistance. So obviously, I think it's fantastic that these health workers in Singapore can get the money when the government tried to prevent it from happening. These health workers were entitled to this money, and crypto allowed them to get it from A to B, preventing all those funds that are being seized. But what is going to happen further down the line when the big cryptocurrencies implement privacy? And I did a video 2 years ago called The Biggest Headwinds Facing Bitcoin and Ethereum That No One's Talking About, and they're still not really talking about it. Wasabi Wallet is a Bitcoin wallet. These technologies are going to get better. Chainlink acquiring a privacy-preserving Oracle solution. Ethereum has been implementing privacy with ZK Snarks. We've got Enigma this week announced that their token swap over to the Secret network. It's all happening on Binance. This is a project I've been very excited about, but it's a privacy layer for secret tokens and secret smart contracts. Amazing to get listed on Binance, and it's another one that's up 1,000% in a couple of months. But how are regulators going to think about these different coins that have got layers of privacy, or if Bitcoin and Ethereum go private? So that is going to be a very interesting conversation to have. All right, so Ripple faces a lawsuit in Australia over their Pay ID system, which is very commonly used in Australia. A bit of a name clash there, so it'll be interesting to see who wins that one. Ripple have filed for 4 trademarks in the US, so trying to get a few more patents, maybe not the Pay ID one there, but look, I do think the competition continues to heat up in that payments region, as you know. We've got some more stories we'll get to in just a second. But look, I like these projects that are doing specific things. So Icon targeting KYC for South Korea's second largest bank. This is one that we interviewed a few months ago when it was down 99%. We spoke about this project, and now it's having a good run. So well done to the Icon community. MasterCard Asia files a patent for Tangle-based billing system, so specifically mentioning IOTA, and this is another coin that's had a great run from when it was down well over 90%, and I know you guys think I sound like a broken record when I was saying some of these projects that have good fundamentals, they're not dead, they're going to bounce back, and they have been very, very strong performers. A Swiss bank announcing their first stablecoin commercial payment, so yes, I do think the banks and the central banks and the governments are all going to use their own coins. Reserve rights was the one that I mentioned at the start of the show that's doing a little bit different. So there's different flavors of stablecoins, balancing mechanisms, centralized, decentralized. There is no shortage of these protocols, and a lot of them are now being interactive and interoperable as well. Okay, so Powell Ledger, another good news item here. They seem to have had partnerships and updates every month throughout crypto winter, and price hasn't really responded yet. But either way, very, very proud of the little Aussie company that continues to do well. Aspen. So this is the first security token on T0. So record volume. This was the next big thing in 2018, remember, and STO security tokens didn't take off, but now we are starting to see the tokenization of real estate and a lot of different assets. Now, one of the big trends that I've been excited about, we've been doing research on, talking about at the start of the year, obviously we've been early on DeFi, but DAOs, so decentralized autonomous organizations. And this basically means it's governed in a decentralized manner and it's unstoppable, as well as NFTs and gaming. So Chris Beninsky is one of the people I respect the most. Placeholder Ventures or a VC firm that have done very, very well. So when he says that he's bullish on these things and we've been talking about them for the last few months, makes me very, very happy. Now, in the week, I shared some of these photos. So I attended the World Stablecoin Summit, and this was in Decentraland. So this is all virtual reality. How cool is this? I'm so bullish on these sort of sectors, and not just for gaming, just for business in general. We can do these things in the virtual way. Missouri, another leader in the crypto research field, they did an article on Decentraland and the amount of sales this week. So look, that is awesome. Their platforms have sold 25 million worth of volume. Remember last week Red Fox had their COG sale and they did, I think, 2 million of volume. So really cool that some of these are now getting recognized, and we're going to see the research come out. When these big guys research these projects, that's when the other VC firms and all the retail investors, they read this stuff and it filters through, and I think we are going to see a wave of money come into the gaming space. So last week I did my favorite projects. Game Credits was another one that was on that list, and it's great to see that they are going for Uniswap pools rather than paying $500,000 to get on Binance or whatever it is. And that's what I've really encouraged Red Fox and some of these other projects that I like and talk to.
don't pay that money. Build your community and get on these dexes, and that's where a lot of the volume is anyway these days. So I hope we see more and more of this compared to the last cycle where everyone was desperate to get on the big exchanges. Aragon, another one we've done a lot of research on. Very clearly told people I was adding this one to my portfolio back in March. All of these coins have been strong performers, and once again, it joins the list of projects that have gone from 36 cents to $10 in 3, 4, 5 months. I mean, this is why we love crypto, guys. You cannot get these sort of returns by doing your research, reading our research, and putting the puzzle pieces together. So I really hope a lot of you guys caught this one or any of these projects. I think nearly all of them are up at least 500%, if not over 1,000%. Now, that does worry me when I talk about those sort of returns and everyone starts piling in. And the DeFi craze has pushed these big exchanges to list popular tokens. And the real beginners, they don't have accounts or dexes, and they don't know how to use Uniswap, I should say. So, look, I love it when Binance does something like list Nexus Mutual, which I think is still very early on in its story, compared to some of the other later stage projects that they list near the top, and that's when the beginners end up buying them. I think we're due for a pullback in a lot of these DeFi assets. Binance have launched a new hackathon accelerator, so Indian DeFi. I'm pretty bullish on Wazir X, and I'll have that interview out next week, the crypto exchange in India that Binance have partnered with. FTX have been very quick at launching these DeFi projects, and they've actually launched a Uniswap futures index that tracks the top 100 liquidity pools on Uniswap. So it's almost like a big ETF that has the top 100 different projects on Uniswap there. So interesting move. They continue to innovate. They bought Blockfolio this week for $150 million. Think about all the data that they're going to be able to pull from that. Or they're going to know the coins that people have in their Blockfolios and what they're selling. Look, I think that is a really good acquisition. Another good app that I have been talking about for a couple of years on and off is Bamboo. So speaking of the Blockfolio app, Bamboo is a cool little app. We can do your little roundups in, guys. Gold, silver. So these are the Ainsley gold and silver tokens, or Bitcoin or ETH. You can add other currencies and change your portfolio mix. But this is one because we always get asked about how do I dollar cost average or how do I do those roundup buys. And I think this is a good on-ramp because you've already got the KYC half of it done because you're on your phone, and then you link your bank account like you would with any sort of payment app, and it's done the KYC for you. So a lot of beginners are going to be able to get into crypto and start buying some Bitcoin and ETH without the whole hold up a photo, write the name of the exchange, that KYC process. So this one is under new management from the guys at, is it Digital Capital Management? So yeah, I'll be talking to them. I think they've got a lot of new exciting updates to come. So head over to the Medium and check that out. I'll put a link down below as well. But yeah, check out Bamboo, one that I do use and I really like it. So glad to hear that they're under new ownership there. FTX have announced their second IEO. So this is Hedgeit, a decentralized options platform. And your first thought for a lot of people might be, why are they launching decentralized options when they already do options? But just like last week, they launched Project Serum, which is a DEX, but they've already got an exchange. Why would they do a decentralized exchange? I think Sam is taking FTX in a hybrid model. I absolutely love this. We covered FTT in our research and at ICO stage for 80 cents. And I think that one's trading at $3 or $4 now. And people are starting to realize what a powerhouse Sam is, FTX is, Project Serum. These guys are the new Binance of this market cycle, I think. So let me know what you think down below. Deribit suffered an outage this week, and again, that just shows you the opportunity for the decentralized projects and protocols that have no downtime to come in. The other sector that I am bullish on, I'm calling DWeb. So decentralized data storage, we are going to see experimentation here in terms of scaling. So this one's called Sharder, and they're actually trying to do some of the sharding that Ethereum has on its roadmap to increase data storage there. Golem and Storj, decentralized computation and storage. We're starting to see these metrics tick up. This is the cycle, guys, that we teach: fundamentals, technicals, and then sentiment and what is happening on chain put those pieces of the puzzle together, and that's where you get the big winners. Filecoin have been doing some experimenting as well with the ERP 1559, which is that fee burn, and that's all going really well. So these are the little projects that are going to be able to experiment on behalf of Ethereum. Ethereum can add those upgrades as well. Now, everyone wants to get involved in DeFi, and they're all either pivoting or they're saying that they can help complement Ethereum. So Polkadot wants to build this bridge and enable cross-chain DeFi. Kasuma is one of the projects that has had a huge run because everyone's just saying, well, where's the next DeFi on Polkadot? This is the chain link of Polkadot, and we've seen these projects run. So people are grabbing these narratives and just going with it, and we've seen a lot of pumps there. So I'd say that's more for traders, and be very, very cautious if you're a beginner and investing with that as your only thesis. Tezos looking to improve DeFi infrastructure with their Harbinger price oracles. Radix is another scaling technology looking to bring DeFi mainstream with their high throughput. Cardano is looking to do some of their own oracles in a different way to Chainlink. Flare is this new bridge allowing XRP to be used on Ethereum. So, look, I've been pretty critical of XRP, but it looks like we can try and work together. So, guys, look, I am all for that. I've been harsh in the past, but if XRP want to come over and help Ethereum, then let's see what they do. I'll have to chat to Sam again soon. Neo bringing out their DeFi protocol called Flamingo. So, geez, hasn't there been some interesting names? But look, I really think this is getting towards the stage of Me Too. Interoperability is great, but if gaming takes off, are all these projects going to announce they're pivoting to gaming and then to DWeb and then to DAOs? So do you see where I'm going with this, guys? I don't think there's going to be 20 or 30 chains that all are successful when they decide they're going to pivot to DeFi because DeFi is the hot thing. Now, one of the worst examples and things that disappointed me this week was Binance launching their synthetic asset platform, which is a clone of Synthetics, and then they called it the Spartan Protocol. And if you know about all the tribalism in crypto, we've got the Link Marines, the XRP Army, and the Synthetic Spartans. So Binance have deliberately stolen that name, and I think they're going to get the community offside there pretty early. Synthetics did a rebrand this week, so look, I really like this. It's very cool stuff. These projects that are getting up towards $1 billion locked, they're all up 100x, and they continue to power forward. So Aave put on 40% since they got that financial services approval in the UK after already going up 100x. So that's why you never want to sell all of your tokens. Take profits on the way, but if you own a blue chip and it's still doing good things, there's no reason to continue. There's plenty of reason to hold it. You don't have to just sell it. Another one that's divided the community and everyone on Twitter is up and about as Wi-Fi has climbed higher and higher here. So look, $3 was the first price it traded at. Now on CoinGecko and CoinMarketCap, they didn't start getting the data feed until it was at $30. But this coin was being given away for free. And then it first traded on a DEX for $3. So it hit $35,000 as I'm recording at the moment. Absolutely nuts. People don't understand this. It's only number 30 on CoinMarketCap, and it is a really good project. Okay, we covered this in our 5FA reports in our July edition, guys. So you could have bought this for $3,000, but people said, oh, no, that's expensive because they don't understand market cap, and that's the only thing you need to understand. So go and read up about it. Price to sales ratio, Wi-Fi was one of the most undervalued at the start of the week when you look at all these other companies, but people, all they see is the price and it confuses them and they think it's expensive. So I don't want to say more than that, other than a percentage of all the money that protocol makes goes to the holders of the tokens. There's also a treasury, and they've decided to fund some of the public goods on Ethereum. So this is an absolute OG libertarian feel project, and I just love it. All right, so the big question for all these DeFi projects and yield farming that have been very successful are, can they get people to hang around once they stop the subsidies? So Compound are looking to cut that back. And this is going to be a very interesting example to see what happens when you stop giving people so many tokens. Meme protocol, I think we're going to look back and these sort of things are going to mark the top of some sort of bubble. So it's not all the good projects. The good ones aren't going to pop and go to zero, but just like we saw in the ICO boom, when things get out of control, we've got coins called Pasta, we've got 10 different clones of Wi-Fi now because they've been successful. I'm pretty much steering clear of all that other stuff, guys, put it that way. Ethereum Classic have been hit by their third 51% attack in a month. These chains have got a lot of, I guess, answering to do about how are they going to fix this? Why would you use that chain if it keeps getting attacked? Exchanges aren't going to want to list it if this keeps happening. So to me, this is pretty much a dead chain at the moment until they fix this problem. Cardano. So Charles Hoskinson, he's actually proposed a bit of a treasury solution for Ethereum Classic because he knows that, or IOHK, which was set up by Charles, I should say, they know that they are running out of money as well. So they've got a lot of problems to fix. And this is a reason why coins like Decred that have a good treasury, they can have that bullish narrative play out, because a lot of these other projects that have run out of money, where do you go from there? You can't really do another raise. You can't sell more coins. That is another problem that coins are going to face. In terms of new projects and raising funds, there's no shortage of money out there. Framework Ventures raised $8 million for a seed round during the week to fund another DeFi tech studio. We've got Zappa. I think they raised $1.5 million. So this is an all-in-one place to manage your DeFi assets. Very, very cool interface. Make sure you've got MetaMask working and just connect your wallet. That super tutorial is coming, I promise you. And we're seeing the trade-off, or the option for people, because they're now demanding that they get these interests and these returns. So the more centralized solutions like Voyager, that's a Canadian broker, they're now saying to their holders, well, hey, we'll give you the interest on these DeFi tokens, because they don't want people going to these decentralized options. So I think that these guys are going to lose in the longer term. And it's still a lot of education to get people comfortable with using this when someone else can do it for them. It's also very dangerous in terms of Uniswap. We've seen a lot of fake tokens list because anyone can put up a token. So I do like what they've done this week, and they've introduced token lists where you can import official lists of tokens that different trusted companies have. So do look to do that, guys, because there have been so many fake tokens on Uniswap lately. You don't want to buy the wrong one. This was a good article on Medium all about XDAI. So this is another, you can think of it like a sidechain proof of stake network for Ethereum, and it is going to solve the high gas fees and transaction congestion. I think that this is probably going to win, or be a very good shot at winning the Reddit scaling bake-off as well. So look, one that we will have to cover in more detail in the group, because I do really like what they're doing, and I like Austin Griffith, the developer that's heavily involved in that one. USDC 2.0 has launched. So this is, again, the company now paying the gas for stablecoin fees. So another, temporary fix, and the option that companies have is to pay the gas fees for people. We've seen Dharma Mobile Wallet do it recently, but it's very cool that USDC are doing that. Maybe they'll capture some market share off Tether, or maybe it is a last-ditch move because they see Tether moving over to OMG network. Another big item during the week was ConsenSys acquiring Quorum off JPMorgan, but JPMorgan also invested a large amount of money in ConsenSys. So look, a bit of back scratching there. The Joe Lubin interview and my tweet was a little bit controversial there. So look, I am a believer that this sort of technology is hot competition for those other payment platforms that are trying to get the banks on board. And we're hearing these figures come out. Ethereum's baseline protocol has already got 600 corporates signed up. So Nightfall, Baseline, these technologies that have been produced by the corporates themselves, or the Enterprise Ethereum Alliance, or ConsenSys, these big companies and banks, they're now trusting this, and they are going to use it because the privacy issue is solved. And that was always the thing they worried about using a public blockchain. BitGo looking to become a qualified crypto custodian in New York. They're also looking to build a little sidechain because wrapped Bitcoin has become so popular and they're having to pay those fees on Ethereum. Here we can see the amount of coins, the wrapped versions of Bitcoin. So this is the different flavors and varieties where you can put Bitcoin on Ethereum, and that has just gone absolutely parabolic in the last month or two there. And a lot of people were worried about the on-chain data telling us that coins were moving, thinking that they were going to exchanges. But to me, I do think that a lot of this is some dormant Bitcoin now getting involved in DeFi, which isn't a bad thing at all. Grayscale's digital currency group are entering the Bitcoin mining space with their new subsidiary Foundry. So just a lazy $100 million investment there as mining continues to become a competitive landscape. We've got the next one here, $1 billion worth of Ethereum and Bitcoin now sitting in these exchange traded notes. And again, these are a product that actually have to track the price by buying the real assets in Europe. So look, that is fantastic news seeing those numbers grow. Fidelity's chief has spoken about launching another Bitcoin index fund this week. And that good news I mentioned before about the third company putting 40% of their cash reserves in Bitcoin. Now, as we look at price, we've just been waiting for this correction and the markets to have a little bit of a breather. And I tweeted out, I think we're getting ready to break out of this falling wedge on Ethereum. Very similar patterns across all the different coins here. So when we have a look, let's just check out that Ethereum chart. I've taken off all my drawings. You can see that we did successfully break out of this. This was actually quite a nice little trade in the end on margin. Let's have a look at the weekly chart. Take off all that clutter again. Well, there's just no pullbacks, isn't it? This is very healthy bull flag activity compared to here where we got these sharp pullbacks. We've now broken out. We got that higher high, and it's been a tremendous run. But if we have a look at something with a little bit more history, you guys know the story about how quickly we went to $1,400 once we got over that $400 sort of dollar mark. So that is the next resistance around that sort of $475 mark, $500. But as long as the market is just catching its breath, there's very few people selling. If you've got in anywhere here, you know the bull market's ahead. There's not a lot of people that are going to be selling. That's why we haven't seen a big pullback, because people haven't had a chance to get in. It's the same story with Bitcoin. You know, everyone was telling you it was going lower and we were bullish. I know you guys were as well. This was a bull flag. We broke higher and it looks like we're just forming another bull flag, and I see no reason why we can't continue up. You know, gold gave us a lot of clues after Powell spoke, and it's had its little correction as well. Look at these wicks with buys coming in. So look, I know it's all about the dollar. That is what we want to be watching. But what an exciting time to be in crypto. DeFi's booming. I'm going to be doing more research on gaming and DWeb for you guys, as well as DAOs, because we think that's where all the VC money is going to go next. I hope you guys have enjoyed this week's episode. Head over to nuggetsnews.com.au, smash that like button, subscribe if you haven't already, and I'll talk to you again soon. Cheers.